Good morning.
Morning.
I think we're enjoying this intro music
I
quite
know.
live.
Yes, yes.
Oh yeah. Oh yeah. All right. I'm gonna stop that. Good morning. Good morning. Welcome to our show, Coffee Time with Marie Torossian CPA. If you are a returning member of the show, welcome back. If you're new, please give us a thumbs up or a hands up in the chat so we know you are new. I always encourage you guys to please go ahead and give us a subscribe or like the channel that you are watching us from so that you always get the alerts when we go live or when we're scheduling to go live. And we are going to be doing a few more shows. Like I have a different show that I have in mind. So stay on the lookout because I'm going to be putting out a lot more information on that down the line. And of course, just to quite remember that we are going live with Coffee Time every Thursday at 10 a.m. Eastern Time. I am your host, Marie Torossian. I'm a certified public accountant and a chartered global management accountant, an experienced auditor, and a CFO. As an experienced advisor, and I'm using my valuation MT methodology to help business owners to go from their first million to 10 million and more. I'm also a Grant Cardone licensee, and I'm helping businesses through sales and marketing using his strategies. So with that, I wanted to skip through a little bit of the intro because I want to, get into this very big, cool conversation we're going to have. So I want to do a quick intro to Pedro. Pedro, he's my featured guest and my tax colleague. Welcome back to the show.
Good morning, Marie. Good morning, everybody. Pedro Gonzalez, CPA, business and tax strategist. We're here to help you with taxation, minimization of taxation, and improving your cash flow and exit strategies. Like I always say, we all gonna exit. It depends on how we're gonna exit. So we're here to help you in all different facets of your business and your financial goals.
Yeah, absolutely. Absolutely. And of course, we both have authored books, and I'm going to go ahead and put the link, and it's going to go down the thing in the banner. And just to give you guys heads up, just a summary of things we've talked about in the past is we've talked about partnership agreements, buy-sell agreements. We've talked about 1031 exchange. This was a very recent one, a couple of shows before. We've talked about how to use your car for business. There's a lot of crazy information out there. So what you should be doing is listening to us, the experts, to the right things. So don't listen to all these people writing up crazy ideas. We've also talked about how to stay motivated. And specifically last week, we talked about the current situation in the economy. What are the right things you should do to stay motivated and stay focused, and how to speak to your advisors like us to make sure that you're doing the right steps to keep your business going strong. And so today we really wanted to focus on a very big discussion that's happening, and we've mentioned a few things about this before. But very small areas, right, Pedro? But this is something that's going to come down the line because actually the IRS has been definitely putting a lot of budgets out there to go through IRS audits. So this is a really big conversation, and we really wanted to make sure we give you guys a lot of information on how you can protect yourself and make sure you are ready in case you do get a letter. So with that, of course, Pedro, both of us have been in the, from the financial audit side, we've both had that experience, but now that you are more on the tax side, so give us a little bit more of how you see this happening. What are some of the key things that you've already seen happen, and we'll take the conversation from there.
Yeah. I guess, for there's a lot of misconceptions about especially tax audit. I think a lot of the entrepreneurs are aware, or at least have some notion of what financial statements audits are. So I thought that to at least bring some clarification about what tax audits are and how to help you, so then at least to reduce the risk of you being exposed to an audit. So again, people think, for example, the misconception of the IRS coming into your business or your house and knocking on your door, that is not really the reality. Yeah, I mean, they're not going to be coming knocking on your door or
Just
putting
suddenly.
Yeah, putting padlocks and things like that. You probably have heard story. You probably have seen things like that, but that's usually what's in criminal cases where those are really a small percentage.
Right, right.
The thing is, it makes it into the media, makes it this big thing, and then so everybody gets, oh my God, the IRS is gonna come and knock on my door. But that's not the case. The reality is that it usually comes in the form of a letter. That's usually what it is. You receive a letter, and is what we call a correspondence audit,
Mhm.
and that is the majority of the tax audits that the most people are going to be exposed to when usually is where the IRS needs some clarification.
Right,
So similar to an audit of financial statements, when we're auditing your financial statements, we at times need clarification. So we will be asking you questions. So in the case of an IRS, they're going to send you a letter, and usually the reason is because there's something that does not match with information provided to them by third parties.
right,
That's
right,
usually what happens is that either you forgot to include a 1099, or the amount that you reported does not agree with the amount that it has already been reported to the IRS,
right.
and that's what most of the time triggers those audits. Now, what I advise, everybody, including people here that they're listening to us, is that the number one rule that I advise is that you should not represent yourself in a tax audit.
Yes,
Uh,
absolutely, absolutely.
let somebody, let your tax professional do what they have been trained to do. And you focus on your business, and I'm more now talking to, but it applies even to the individual. Focus on your family, focus on your business, and let the tax professional handle the situation and the communication with the IRS. In essence, create a buffer between you, your home, and or your business.
Absolutely. It's basically all they have to do is, ask for the service, and they would sign off a power of attorney, and then you would be representing them, for example, in that case.
Correct.
Yep.
Um,
Simple, guys. Very simple.
No, it is, and especially when it comes to tax audits. I mean, it doesn't matter how simple or how complex the situation is. It pays off as to hire a tax
Right.
professional, let them handle that situation. The same way that you should have somebody prepare your tax return. Let somebody handle,
Of course.
hire the experts and the professionals to handle your tax preparation and your accounting, so it's done properly. And this is also another way that you're going to reduce your risk of being audited. Having good, solid, clean books, it will certainly pay off in the long run. I know I have said this many, many times, but I can tell you that when you get that letter,
Yeah.
and especially if you don't have very good record keeping, is when you realize, oh crap, what I mean? Because you're not gonna get a letter today about 2021 or 2020.
Right. You're gonna go backwards. Yeah. Yeah.
And,
Absolutely.
like this week, somebody came to my office and they received a letter for 2018. So, I mean, so to go back, and if you don't have good record keeping, imagine trying to recreate something from 2018 now.
Yes.
It's going to be almost impossible or very, very costly. So again, hire professionals to handle your representation for tax audits, and hire professionals to handle your ongoing accounting and tax preparation. So now the big question is, and usually when I get asked is, how the heck did I get picked?
Why? Why did
Why
they
me?
pick me?
Why
Why
me? Exactly. And now there is there is statistics that are issued by even the IRS. And I like to look at it, we as accountants and tax, we love numbers.
Yeah.
So it will probably give you a headache, but the information is public, is publication 55.
Hmm.
And the IRS issues this information, and then they are sharing historical data. With that, you can tell which type of individuals, levels of income,
Hmm.
an S corp versus a C corp versus a partnership. You can tell which one have a higher propensity for audits. Um, they also have something called a discriminate function system. What the heck does that mean?
Right. Of course,
It
they have to pick the most complicated words so that nobody really understands what they're trying to say.
Yeah, but again, especially people like yourself and myself, we have done financial statement audits.
Right.
What it means is, so you can probably figure what it is by
Yeah.
because of our background. But the general
Right.
public, they look at that and they're gonna look at discriminate. Oh, so they're discriminating. No, what it
Right.
is they are the discrimination is not you individually. It's a discrimination in the sense of selecting certain
The way it's
industries.
picked. Right.
Exactly. So they know that there's certain industry they have a higher propensity of misrepresentation of income, and
Right.
so those type of industries will get picked more than other industries. And so it's not
Do
what
you
I'm
have any
saying is
top
it's
of
not.
mind?
Hmm?
Do you have any top of mind? Certain
Well,
industries?
yeah, usually it's going to be, for example, industry that handle a lot of cash transaction, even as of today. For
Hmm.
example, the statistics still prove, like for example, restaurants,
Hmm.
uh, uh, laundromats, car wash, a
Do you hear
lot
that,
of
guys?
Hmm?
No, I'm saying, do you hear that, guys?
Yeah.
Those who are listening.
Yeah, so those are going to have a higher propensity to exposure of audits, and so if you are in those type of industries, it behooves you to again having a very good accountant to help you track those numbers, and because again, you probably have a higher propensity for audits, and you
Right.
have to be prepared for that. So higher. Those type of industries. So that, again, the discrimination is that because you are in a certain industry that they statistically has proven that has a higher they have found more errors in those so they're gonna just like in order to a financial statement we're gonna then divert our resources into those areas
Into
where
that area. Right.
exactly we're gonna get a higher return of our resources by targeting these type of industries
Hmm.
and so that's what that other methodology they're using, you know what I mean, so
Right.
they already have the kind of statistics. um, Now, something that will surprise some people, um, the other one is traders, especially recent and in recent times, as traders and securities and people involved in crypto.
Hmm.
They're also big targets. There is not because of the um, cash, but because of some of the. And I'm not going to get into the specifics right now, but basically those are also another area that tends to have higher exposure, or at least the IRS is paying more attention to those taxpayers.
Right. And we did cover a little bit of that crypto and some of the regulations that are coming down the pipeline, guys. So if you can just go back after the show and check out that episode. It was about 10 episodes back.
Um, so again, you have to put yourself on the side of the auditors, or basically, they have identified, they have accumulated a lot of data on again type and levels of income, including regions. They understand that certain regions of the United States tend to have a higher propensity for errors, and so
Hmm.
they are going to be targeting those. So they in essence assigning in a way kind of points. So the more points, you become more of a target, and so they're
Right.
saying let's go and take a look at these returns. They are they're not that this discriminate system is not made out public exactly how, but again, people like yourself and myself that have a training in auditing, we kind of have an idea. I mean, I'm not going to tell you we understand that because of the nature of the business, you're going to have a higher
Right.
exposure.
Right.
Um, Now, in my 25 years of experience, well, most of the audits I have represented don't turn into a nightmare. And this is even what I want to, why it's important. One, when you receive the letter, to quickly bring somebody to help to represent you,
Right.
and to address it quickly, because it will keep everything under control. I mean, the same
Right.
happens for
Right.
financial
Of
statement
course.
audits. When
Yes.
you're auditing the company and you see them hesitating in answering your question or providing you the records that you need,
Yes.
to issue your opinion. So
Yes.
it raises
Exactly.
your level of concern, and it's like, why is it that I'm not getting a response? The same happens
Exactly.
for the IRS. They send you a letter and you're not responding to that letter. So why you're not responding? So now all you're doing is raising the level of alerts to
Of
them,
course.
and to potentially expand the audit, something that could have been resolved very quickly.
Right.
Now, but because of your fear, now you have done is cause a bigger problem for you. But I can assure you that most of the audits do not turn into nightmares. They're not going to come into put padlocks on your home or your business if you address it promptly and professionally.
Right.
However, I have seen during my time a share of tax audits that do turn ugly, and usually is because people that make up stuff. I
Right.
mean, they basically are reporting things that cannot be backed up,
Exactly.
and
Exactly.
that's
There's no
usually when,
support.
yeah, and
Right.
that's usually when you're gonna see the trouble. Yeah, and so that's why I encourage people is that to have really clean record keeping, to have receipts, especially for very critical and material items. If you're buying equipment, you bought a car,
Exactly.
you should have leases, for example. The fact that if you have a lease and they're gonna be looking at your rent expense, and you say, "Well, I don't have a copy of the lease." That's what do you mean you don't have a copy of your lease? So things of that.
Exactly.
Yeah, exactly. I know. Trust me, it has happened. You know what I mean? That they
Well,
can, it's like, well, what do you mean
yeah.
that you don't have a copy of your lease?
Exactly.
So, having those kind of documentation, you know what I mean, of you bought a building, you should have your settlement statements.
Exactly.
If you're doing
Right.
major repairs, I mean improvements. I bought the building and I have to redo the whole top floor. Okay, so
Exactly.
major constructions that we
Every
have to.
detail. Absolutely. Absolutely. And I remember when I was at my old employer's office, that's something that we did. We spent about, I think, close to 50,000 worth of, leasehold improvements we had to do one of those years. And then portion of that, let's say on the furniture and fixture side, we had about, I think, $40,000 worth of in kind kind of like furniture donations. So I had a full on schedule. I knew when the auditors were to come in because now I'm on the inside, on my corporate side. I knew what the auditors were going to ask. I had every detail, every single invoice, every single what it was for listed in a schedule to make sure. And then from there, of course, once you capitalize it, then, because every single thing has to be covered, guys. Every single thing has to be listed, covered, all the pages attached, because that's the only way you're going to prove that your intention was to you make sure that your records are there and there's no funny business.
Correct. And again, just what you just explained is the reason why to hire a professional. Because, for example, in your case, just a simple fact that you have been involved in financial statement audits, you understand
Mm-hmm.
why is it so critical to have all this documentation. So when the
Absolutely.
auditor, in this case, the tax auditor, comes in, I already have all of the documentation basically ready. In essence, I have performed a quick internal audit. I
Yes.
already identified the areas of risk, and I have already the documentation. So when the tax auditors come to me in this case with me, I already have the information in essence laid out for them. Makes the audit go a lot faster.
Absolutely.
Their level of concern for
Confidence.
is minimized,
Yeah.
and they basically check off and they say, okay, so let's move on. What again, going back to the nightmares, what usually also happens is when the information is incomplete, you do have record keeping, but the information that they're asking is incomplete. Also causes them concern because now you have incomplete data. I have to expand my audit.
Yes.
And so right there, your costing is unnecessary now, potentially. Okay, so I might move out of an area that I was auditing because the information is incomplete, inconsistent. And now what basically you're doing is in essence for me to satisfy myself that there's no other misstatements in the tax return. let me look at another area. And that's when the
Right.
oopsie daisy, because we did not prepare for that. Now they start looking into your contract labor. They found out, well, you don't have
It's another.
1099s, and now you have a huge problem. You know what I mean?
Right.
So
It becomes that unraveling of,
exactly. So if we can narrow, keep the auditor in essence in the area that they initially identified, and we can supply them the information that they're asking for quickly and
Right.
in complete, then you basically, I have seen this audit being wrapped up pretty quickly, and they sign off, and in some cases maybe some minor adjustments that
Sure.
it's better. Listen, just sign off on this. Let's move on, because you don't want them to start going into other areas and potentially find other problems.
Yes, yes, absolutely. And then I wanted to bring up the fact that for our listeners and those who are watching us live, you know, if you feel that you're unsure right now, you're listening to us and you feel like, okay, I'm not sure, I did something myself, or I'm not sure, I can no longer get in touch with my past CPA or accountant or the filer or whatever. You are more than welcome to send us an email, and we can very easily look at your past 3, 4, 5 years of tax returns and review and see if there's anything that could be a misstatement, and you can always file an amendment. Yes, Pedro?
Correct. And that's, when we take over new accounts, we,
We
you
usually do
said
that anyway. Yeah.
exactly. We ask for at least a 2 to 3 years back. We look at those returns. We see if there's anything there that could potentially, like you said, be a potential area of risk. The reason for the 2 or 3 is because that's the open window for the typical audits. Like, for example, right now they're still looking at 2018. It'll be closing very soon, but it's still open, meaning that 2018 is still an open period for audits. So you have to look at those returns and see if there's anything there that could, be an area of exposure. And if necessary, it's better, if necessary, to file an amendment before you get called for an audit. So now what I wanted to do is going to share with you a couple areas of the groups, more specifically some of the areas, and some of them might surprise you, of who has the higher exposure for audits.
Awesome.
And so, for example, let's say that you and I, just to give you an idea, X, we're in equal X. You and I equal X, okay? Now, there's a group that is 5X, and you'll be surprised who that group is. And it kind of stumbles a lot of people. And it's not what most people think, and that is people making less than $25,000.
Wow.
Yep. So right now, especially right now, they tend to be a higher target. Now you wonder why. I mean, they're in a low income, and actually there was some articles back a couple years back about, especially right around the COVID period, because they felt that they were being unjustly targeted. But the reason, again, think about it. The reason, again, you got to think about it from the auditor's perspective.
Right.
They're looking is for misstatements.
Or
They're not targeting
underreporting.
you because you are low income. It's because when when you are in that threshold of $25,000 or so, and I will probably go a little higher because, again, families of 2, 3, or 4, they're
Right.
little income, but it usually has to do with the tax credit that you're entitled to.
Mm.
And there is a higher propensity of errors being made of claiming those type of credit, the earning credit, and for example, and the child tax credit. That because of that, they have targeted those type of returns that they tend to take longer to review, and they'll be asking for additional information.
Mm.
So that type of group will tend to have a higher risk of being, again, audited. Again, keep in mind that when I talk about audits, it's going to be the letter that's going to be asking you for additional information.
Right.
And so that's a group that tends to have a higher exposure for being audited. And again, it tends to kind of baffle a lot of people, but it is a targeted group.
Yeah.
The other one is going to be individuals that file Schedule C, and I have mentioned this before here, and I tell not only my clients but other people that ask me the question is Schedule C. Schedule C tends to be highly audited.
Mm.
It has a higher propensity for audit, sole proprietorship, compared to for example, in 1120S, there's a 8 times higher audits. It's an 8x compared
Wow.
to an 1120S. And so when you're filing at a Schedule C, just keep in mind that you potentially, you are putting yourself in a situation where you're going to have a higher exposure for audits. Now, you wonder, but why Schedule C? You know what I mean? Because most of the time is there's a lesser accountability in the sense of record keeping, accounting. They tend to
Right.
find more errors in. There's no, for example, there's no balance sheet. There's no, most of the Schedule Cs that you see filed,
Right.
they lack of a corporate structure. They don't run it, and some people might feel offended about it, but they don't run it like a business. You know what I mean?
True. They're
So,
like the self-employed. They're not really keeping track of things like a proper business. Yes.
correct. Correct. It's unlikely that the sole proprietor will show up at my office or your office with a full set of financials, with a QuickBooks, and
Right. Right.
reconcile bank statements, separate bank statements from their personal.
Right.
So
Yes.
creating the separate. So what happens is that the IRS is looking at the Schedule C. This
Right.
individual is an alter ego of in this case of Marie. So what Marie is doing is running a lot of her personal expenses through it, or we don't know where Marie starts in when the business, the Marie, I don't know, enterprise that she created, DBA, where does this one start? Where Marie starts and end, and where might the business. So that's why when you're Schedule C, you're exposing yourself also to be to look into your personal records. You know what I mean? Because they don't know. And
Right.
most of the Schedule Cs, most of them do not separate. You know what I mean? They don't have separate bank accounts. And I tell people, listen, what you're doing is exposing all of it to be part of the audit.
Right. 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 And would that make a difference if, let's say, the person filing a Schedule C has a separate business and a separate business EIN, or does it wouldn't matter?
Well, again, you're not required to have a separate EIN. The EIN by itself is not what is going to make it different. To me, if you choose, the thing is that and again, I might offend some people with it, but this is my personal opinion. It's not Marie's. Is that they're doing it on the cheap. Yeah, I mean, so this is individuals that are kind of trying to keep it. I don't want to create a new entity. I don't want to pay somebody to have to prepare my 1065 or an 1120S. That's an additional, quote unquote, additional cost. So they try to keep it, very kind of low budget. I don't want to pay somebody, so I'm gonna do an Excel spreadsheet, and here are my income, my expenses. That's what happened. But that is what the IRS also knows that. They know that most of these 11, that's why, again, all they're trying to do is target their resources to the areas where they can find the most mistakes with the least amount of effort.
Right.
Just
Right.
like you and I, when we're looking at financial statements, we're going to target those areas where could potentially, where the higher risk of misstatements are going to be.
Right. Right. Yeah.
Because,
Absolutely.
yeah. So it's the same.
Based
So
on the
they're
type of
looking
business.
at exactly. So Schedule Cs tend to have a higher propensity for audits, and because of the nature. So if you choose to uh, run your business as a Schedule C, just have good record keeping. Again,
Right.
good, clean record keeping. Separate your business. In essence, create a separation of business,
Right.
and your personal.
Yeah.
Marie Enterprises, Marie Individual. Separated. So all of your transactions is
It's all
running through there.
separated.
Exactly.
Right. Exactly. Exactly.
Yeah.
Awesome.
So yeah. So just how can you prevent and so how can you prevent being audited? Which is another question that I was asked. One, with the information that we share here today, avoid those areas of potential exposure to risk. Now,
Sure.
some cases it cannot be avoided. You're running a cash intensive business. So the way to mitigate, to lower your risk, record keeping,
Right.
good clean
Absolutely.
accounting. I mean,
Yes.
that's how you lower your risk. Or when you get audited, then at least I know I can address it quickly and less expensively. is by doing that. I would look into the 12 dirty, what do they call it? The 12 dirty, the IRS publishes every year. And usually they're going to list what they consider the 12, it's called the 12 dirty something. I can't remember the name. I'm sorry about that.
Find it.
Let me see if I can find it. The 12 dirty dozen. The 12 dirty dozen.
Oh, okay.
I mean, no, the 12 dirty dozen. The dirty dozen is, the IRS dirty dozen. But basically, are going to be these sometimes syndications that are being promoted. One that tends to come up a lot is called the syndicated conservation easements.
Okay.
So again, these are going to be people that have means, and then so they're looking for tax credits. They're looking for ways to shelter some monies, and are done through certain areas that the IRS has already identified that there's a lot, in some cases, fraud committed through those. And so if you're involved in some of those, even though you personally might not be thinking, I'm not committing any fraud, but you're putting yourself in that bucket, in that group. The business tax credit, I know, and you have heard me advising clients about business tax credits, but there's also been abuses done through those. So, for example, research and development tax credit is a powerful tax credit used in business. Is legal. So the reason what happens with this one compared to what I mentioned about the easements is that people are claiming credits that they're not entitled, or the amount calculated is overstated. So that's why it's you have to make sure that if you're going to have this type of business tax credit, people know exactly how to calculate this, so then you're not putting yourself in a situation where it's miscalculated.
Awesome. By the way, I put the link for that IRS 30 dozen. So those who are watching us and right now can actually check it out later.
Yeah. Well, you might be in one of them. You say, "Oh no!"
So, and I know the chat actually, whatever I post now live, and I know it stays on the Facebook page, but not on the YouTube page. But yeah, on the Facebook page, it does stay even after we go offline. So at least it'll be right there if anybody comes back to watch the replays. Awesome. Any other last minute thoughts on the IRS audit that you wanted to cover?
I think again, to conclude, respond promptly to IRS letters. Hire a professional to represent. Hire a professional to maintain your record keeping. Clean, good record keeping will pay off in the long run.
Absolutely. Well said, sir. Well said. And then, guys, we might actually continue the audit conversation and spend a little bit more time on the financial audit next week, because obviously the audit conversation can be very long, and financial audits are also something that you may require at some point in time as your business is growing. So we'll cover that next week. So we already have our subject for next week. So please come back and listen to that. So we are already at 34 minutes. I hope you really, really enjoyed today's show. Please make sure to subscribe, like, and share. Invite your friends, invite your family to see the show. We're putting out so much great information for you guys. So we really want you to come and enjoy and the show and then learn with us.
Exactly.
And so before we leave, I want to leave you with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope that we are 2 of the 5 people you are spending your time with to learn from us and grow your business. Until our next episode, have a wonderful and blessed week. Bye.